Futures Edge about how before the show we all look half asleep and then it counts down and go, hey, welcome to the
Hey, how are you?
Well, this is the Futures Edge. I am Jim Muriel. That's Bob Iacino. This is the first Tuesday of every month. This show is live. And one of the things we love about this show is Mike Arnold is the absolute best technician we know, the chief technical strategist for Path Trading Partners. I know many of you guys follow him on his daily show. Thank you for being here, Mike. But before we start, Bobby, it's like I'm in confession right now. Just 10 minutes ago, I'm in my kitchen downstairs, and my wife has a bowl of Dove dark chocolate sitting there in the counter. I haven't eaten like crap shit food in like 6 months. And I'm like, look at that. And the bowl's talking to me saying, why don't you just have one? And then I just had 5 of them. Do you ever have slip ups like that?
Yeah. And what I noticed with those slip ups is that one is not the thing, right? It's just, it is so much easier to eat like a steak, for example, and just eat the one steak. It's so much simpler to say, I went ahead and I had, 3/4 of my steak and I'm full. So I'm put the rest away in the refrigerator. Cannot do that when I slip up.
No,
it's just one right after the other. So that first one is actually, I don't want to say the easiest one. It's the easiest one to avoid.
It's the gateway.
Yeah. It's the gateway drug.
Yeah. So right now I feel like crap. I feel guilty. Probably I can't run because I ran this morning, but Michael, how are you?
I'm good, but you know what? 80% or stronger dark chocolate has very good health benefits and
Dove
very
dark chocolate. Sugar. Dove dark chocolate isn't even real dark chocolate.
No, I'm saying if you're going to eat dark chocolate, 80% or stronger, it's sort of bitter, but it has.
Tell my wife to have that laying around and not
put that out. You know what?
I don't disagree with you, Mikey, but remember when they used to tell us that like one drink was okay? As a matter of fact, it's probably healthy. Yeah. And then they went back on that. That's coming with chocolate.
No, it's not.
Yeah.
No, it's not. No, there's actually a lot of really good medical studies. No, it's not one drink. It's, you can't have more than one bottle.
Yeah. That's what I thought.
Will bet you
it's one bottle.
$1,000 that will happen. But here's the thing. You can't collect till I die, and it hasn't happened.
Okay. Yeah. And that'll be difficult. Yeah.
Okay.
By the way,
you know what?
Sometimes you guys know that sometimes on the show we talk about markets. Actually, this is honestly my favorite show of the week because
your favorite show of the week,
the month, whatever, is because Mike Arnold actually leads me in the right directions for not just trading, but for portfolio construction investment. And I am right now thinking that we're at a very interesting point in the S&P, and this chart shows it very well, which, by the way, later, there are some trades I've done. By the way, I don't talk about individual stocks, so I'm asking Mike Arnold because there are some trades I put out in the last 2 or 3 weeks that are working nicely. Tesla and AMD, I'd like to look at those at one point in time too. But let's look at the S&P. What do you see?
Okay, just a cautionary aspect. We're getting to daily cycle tops, potential cycle tops, and weekly cycle tops. I just flipped over to the weekly turning down. So I'm going to be watching for potential consolidation or breakdown level. Breakdown levels are pretty far away. Until that happens, I'm still focused on daily pullbacks into the rotation zone. So, because again, cycles can sort of stay up there a little longer than we think, but they should be topping out this week. And that does not mean we have to have a massive pullback. That means we can sit in a trading range for a little bit of time. Now, there is, let me zoom in, even though it technically looks like a triple top, this still fits in the lower category of double top because this did not pull back enough to invalidate it. So the only way I start watching for a bigger correction is if we have a daily close below 57.56.50. You can just remember 57.56. That would be below the 21, which is the bottom of the rotation zone, below the 200, which is where we roughly had the low close from last Friday, and then would be out of the way of the 50 EMA. So then I'd really, not only would we have triggered a lower probability double, and that's not a crash move. That's not a throw up your arms in despair, the market's done for. That's just a potentially bigger pullback, possibly closer to 5,000, possibly. Now, that may never trigger. If we get above 60.52.75, 60.53 area, that is off the table. And
Can I ask you a quick question, Mike?
Sure.
I was under the impression that 60.08 old highs. I had it as 60-10. A settlement above that would kickstart you being more bullish. It's changed and widened out. Why is that?
Now we have some new harmonics. Again, things change.
Right.
In a month, a lot of things changes.
Yeah.
So right now, we pretty much need a close just above 6,000. All right. But that's when we get that close, it does not mean I rush in, because I'm still looking for pullbacks in the rotation zone, especially with cycles being at the top. And we're setting up potential divergences unless we get a major, massive push higher. The key levels at this point I'm looking for, minor level is 60.23. Then we go to 60.53, which would invalidate the potential double top. And above there, we're looking at your harmonic cluster near the prior highs of 61.6650 and 61.3875. That's my next key level if we continue to push higher. Beyond that, if we go to make new highs, the current harmonic sits at 62.84.
Okay, what about the -3 +3 scale for the next 2 weeks?
Right now, I'm really at I'm hovering towards 0, just because we're getting some potential exhaustion moves. That does not mean I'm bearish. That means, you know what, I'll be looking for the pullbacks, and then I can shift to slightly more bullish. Again, I would not be rushing to go all in at this point. I'd be looking for key pullbacks, just like we had a little minor pullback last Friday. Reed gave you another potential entry on Monday, but into the rotation zone. But now I'm being a little patient, letting this one play out and just trail to the upside. We are going also, you can see, let me call it the weekly. You can see we're going into an area that back even from November, we're still trading below the highs from November. And look, from November, we pushed up a couple times, and then we had the major pullback, but there is a huge amount of resistance overhead here. So to say we're just going to blow through this area is not likely, unless something comes out of the blue and you have like 80 trade deals come through, or if tariffs just completely disappeared, then I could see it blowing through there. But otherwise, it's got a sort of a hard grind to get through some of these levels up here.
Bobby?
Can we look at crude oil? And the reason I want to look at crude oil is because crude oil is basically trading almost entirely the last 2 days on the Canadian wildfires. 350,000 barrels a day being shut in right now. That's right now. By the way, OPEC has been talking about putting more production on the market. This is stuff that's not coming here now. And regardless of tariffs or anything else, Canada is a large supplier of crude oil for the United States. So as refineries sort of work through their feedstock, gasoline prices are going to be affected on this. So what I want to know is, has there been a technical trigger to the upside of any significance to you, Mikey?
No, just a minor. There was a minor %B buy signal that triggered on Monday, but it's running smack dab into massive resistance. And what's interesting, you mentioned the last 3 days or so been trading off Canada wildfires. Mm-hmm. There was a confirmed double top that never triggered. Let me put it back on the chart. You see from the lows below Thursday, May 15th, we dipped below it 1, 2, 3, 4 times, but never could close below it, so it was never triggered. You mentioned the last 3 days, though, there was a constant bid under this about 60-50 level for multiple days leading up even to those wildfires. So there's been a little strong bid under this market, and now it's all right, maybe wildfires. What I'm really watching for is if we do start settling above about 65, it's technically 64.87, but we have the weekly rotation zone, and we close above that level on a weekly basis, I will start watching for, again, pullback trades for on a daily basis. As long as the 64 level holds on a closing basis, I will start watching for pullback trades for potential more long setups. Other than that, the little buy setup it could be trailed at this point from a couple of days ago, but there's no bigger picture buy setup as of this point.
So Bobby, I thought Canada was the 51st state. Now is that on hold? That's not happening.
Yeah, it does on hold.
Why are they
It's
so
on hold.
pissed about us wanting to bring them in? Which I don't even want to bring them in, by the way. Why is that so insulting?
I don't know why. Well, that's the funny thing. I don't know why it's insulting. I don't know why the Danes were insulted by us wanting to buy Greenland.
It seemed like a compliment,
It's
right?
like, you know what? Yeah, you like my land. It's we're not doing it, but you guys are great. Like, you're great to talk to. You're great to have as friends. You know, I don't understand that. It's just, again, it's the messenger in the case of
it's Trump.
Trump,
evil, orange man bad. Right.
Yeah. So let's look at gold. And I actually would like to get out of the commodity realm because we have a newsletter now. And for those of you that don't subscribe to it, shame on you. But we have an opportunity to sort of update it live with a couple of things that went on after we released the newsletter on Sunday. So let's look at gold first.
And while he's putting up gold, Bobby and Mike, the newsletter, you guys, and I am on it as well, but those guys are doing more of the trades and equities. Some amazing stuff. You guys make me money. That's why I am partnered with you guys. It is amazing. It is the Unfiltered Investor. Right now you can find it on Slice. And what's the other app, Bobby?
Well, it's not even an app yet. I'll have something to announce soon, but if you don't want to look for the Slice app, which I understand people not wanting to do that, it's going to be at theunfilteredinvestor.com. It'll be there and you'll be able to subscribe to it there. The issue is it's not going to be fully, it's blocked off now, probably to be tomorrow, the next day that it will be up.
It's awesome.
All right, gold. Gold, we did a while ago have the potential triggered double top, which caught on the 50 EMA, turned into a channeling corrective move, and finally broke out of that channel. Actually, the warning sign was back on Friday, May 23rd, when it closed above the 62.5, resetting the probabilities for higher, which the probabilities, I mean, I can say at this point, we've just hit the first target, which was listed in the newsletter of 34.13. And I'm still watching for a reconnect with 34.61. Now, since the probabilities are higher, we've broken out of a channel and we have the separating rotation zone. Any pullbacks in the rotation zone, I'm watching for buy opportunities and higher prices. If we do, there's, again, a fair amount of overhead resistance back from the spike high in April and the other formation that formed a double top on the May 7th. But if we can get through that area and break out to new highs, the targets are 35.77 and 36.44. The only thing at this point that would make me sit up and take notice, since gold is still on a longer term up move, you can see here's the weekly, pulled back into the weekly rotation zone, which is why the other double that was triggered was a part of a lower probability one, rotated back up. The only thing, though, that would make me sit up and take notice is if we close back below the 50 EMA, right now trading about 32.30, then I'd start reevaluating the short-term bullish case and possibly look for more consolidation or a potential pullback. But other than that, still watching for long setups on a regular basis, on a daily basis.
So do you call what has been happening in gold now, Mike, a sideways correction, or is it too sort of up and down as it sits right now?
This was more of a channeling correction. An example of a sideways correction, let me see if there is one in gold, was more like this. See this back in this, besides the last little dip, which sort of turned into more of a pullback, but see how it just went sideways up and down. Now, that doesn't mean a sideways correction. It's not going to have down days, but you're not going to get a multi-leg pullback correction. See how this went down, up, that didn't exceed this high, and then pulled back and broke to new lows, forming more of a channel. That's a longer term corrective pattern versus just a sideways channel.
Okay, cool.
What now, Bob?
I want to go over some of the stuff on the newsletter.
It's awesome.
So I want to start with SSR mining. The symbol is SSRM. We got long this one a couple weeks back at $10.87. Our first target was $12.75, and our stop loss, which first was somewhere in the $9 and change range, I don't remember, has been sitting at $11.10. What's the update on that one, Mike? And what do you see in the price action itself?
SSRM, what was our target?
Our target was $12.75.
And what was the high yesterday?
$12.75.
There you go. And I hate when that happens. You know why?
Yeah. I feel like we can't say it's closed out.
Well, no, I mean, some orders have been filled.
I'm sure some have.
But this reason I don't, and I have stated this on my live stream regularly, I hate hitting numbers to the penny or to the tick, because if you had a resting order there, there's no guarantee you got filled. Some people did. Some people might not have, because it didn't trade through that number. So
what do you think about MIT, market if touched?
Well,
it's complicated for a newsletter, you know?
It's complicated, right?
Yeah, and some people screw up that order. And you know what? On anything fast moving, I do not like market on touch. Now, like something like this, SSRM, that's fine. But, you know, it just depends. And on thinner things, I do not like market at touch, because, again, it touches something and all of a sudden you get filled 20, 30 cents lower. You're like, what happened?
What the hell? Yeah.
So
then immediately it's 20, 30 cents higher too.
Yeah.
Right.
So you know what? I mean, how often? I mean, do you hit it exactly to the penny? It happens actually surprisingly. Now, that's not to say this is going to be the high, but it happens in the short term more often than I'd like. But that does not mean this move is over, especially if the metals and gold and other stuff keeps climbing. So I'm expecting we should probably at least get a retest in the next few days. If that does keep running, you know, and this is just a benefit for the people. By the way, it did look also, here's just something to watch where we might get even a short-term pullback.
200 week.
Look at that 200 week and look at the prior two areas that we sold through the 200 week back in July of 22. Came up, retested in January 23, sold back down. Retested in May 23, and then had the bigger pullback. So I'm expecting, and also look at this prior, see all the support level going back 23, 23, 22. That's actually a key breakdown zone, and we're testing it for the first time. This is a very key area. So on any pullbacks, you know what? Would I be surprised to even see it pull back to the mid to lower 11s? No, that's just pulling back to where we chipped away where we started chipping away at it in March, April, broke above it in May, could not sustain it, then finally broke out. So even on a pullback, hey, it could be wise to reload a position for a swing trade and then assess where the next key levels are. And overall, if it does break above this level, I mean, my next target would be, if it can break above this massive resistance, I'd be looking just above 14. And then there's going to be major resistance near these two tops that against the 200 week, but I'd be looking at the 62.5% harmonic, just above 1650. It's really around 1675 as the next very key target.
Can I add something real quick here? And guys, I've talked to some people about our show and about the newsletter, and it's about, well, I don't really trade very much. I'm more an investor. We are looking at a 5-year weekly chart here. This is about investing in portfolio construction as well. This is about active investing way more than trading when we're looking at 5-year weekly charts. You would agree, boys, right?
That's exactly what it is active investing. When people talk about it being traders, the three of us have been traders as our sort of core discipline for a long, long time. But the next one I'm going to talk about actually fits this profile really, really well.
Good.
Mikey, pull up Costco.
Last question about the miner. Does that mean you're out? You know, it shot up to that level, and that means flat now or no?
The newsletter will say we are flat.
Okay. Yeah.
And you'll see like more of a divergence here in the next one I want to talk about, Mike, which is Costco.
And that does not mean just because we're flat in the newsletter, again, we might then get a pullback and say, hey, we're long again.
Yeah.
You know, but somebody, if they're bullish and do their own research too, and I just gave them an extended target and they want to sit through a little minor pullback and just keep a stop in there, that's fine too.
Yep. By the way, disclaimer, this was a really good week on the newsletter in terms of trades we were already in and things we're looking for. And see, here I am, I'm calling them trades, right? active investments we were already in, as well as things we're looking at. So on May 12th, we bought Costco, and that was at $1,000.01. That was the price we put in the newsletter, a buy of $1,000.01. The first target was 1026.26. That was reached. You can see it on the chart there. The second target, or the extended target, what we call it, was 1056, and that was reached. So as it gets out, like the next newsletter will say, we are not flat Costco. But you're noticing here that something Mike and I talk about a lot, Jimmy. When we put targets out, a target is a place where an action is required. If you're a longer term investor, you look at a stock like Costco, you've heard of it, right? This is not a new stock to you.
Right.
Maybe SSR mining is something you never heard of. But if we see a sort of a pattern like this, and we're telling you, this is our first target, this is our second target, and you feel like you want to hang on to this, you should, especially because we're giving you sort of money in the game and the winning trade that Mike and I have come up with. So now you've got house money. You can trail a stop and keep this for 5-10 years, or you could just keep it for 5.
That's my hope. Yeah. I bought Goldman when Hillary was going to be the president. It was a trade for the next 2 months. I still have a third of the position on.
Mm-hmm.
Yeah, right.
By the way, again, if people are looking for extended targets in this, if it does break to new highs, you got 1,105 roughly, and then 1,130.
Got it.
The next one I want to look at is Amazon. By the way, since we launched the newsletters about a month or so ago, we have had like 5 losers. That's what I wanted to say when I said this was a particularly good week, although I am going to go over a loss here as we go over the trades that were opened, and we had positions as we came into the release of the newsletter on Sunday. And one of those was Amazon, which we got long at 193.06. All right, so let's see. I don't remember the date we got long on that one. I think it was 2 weeks ago. But 193.06 was the entry price. Looks to me like we got long it.
I thought we got
actually, yeah, it was a while ago.
Yeah,
it was a while ago. It was like May 8th or so, May 9th, somewhere around there. Yep. But anyway, the way we had this set up was buying at 193.06. First target price is 208. That was reached. Second, 216. I believe that we fell just short of that one.
Yep.
So here's another example. We've got a first target that was reached. The way that I would normally structure that now is after the first target is reached, I would move the stop. I wouldn't necessarily exit. If you're an active trader, you might exit that first target. The second target we came well short of, came down, support held, and looks like we're getting another sideways sort of a basing pattern. Mike, what do you see?
Yeah, I mean, we're trying to base above the 200. We're in the bottom of the rotation zone and the 50. If we start breaking down, I mean, this one we've had pretty decent days in the NASDAQ and the S&P, and this has distinctly been lagging. So if we start breaking down below some of these key levels, I'm not so keen on this one anymore. And I would personally be looking to free up some capital into some other new setups.
All right, so we might put this one as flat when we release the newsletter next week, Mike.
And we have a trailing stop in there too. So if it closes below that trailing stop, then it's out anyways.
Yeah. So Shopify is the next one. We got long Shopify. I can give you the date on this one. I just got to move my chart. That was another May 12th. And the price there, and I was so mad I missed this one, was 103.99. I missed this one personally. And so I didn't get into it. But the first target of 109 was reached. Again, that seems pretty tight, right? But that's a first target. It might be somewhere where we change the stop. If you notice in the newsletter here, I put stop loss changed. That means we move the stop higher after reaching the target. We have not been stopped out yet. The second target is 114.50, and the third target is the extended target is 121.95. So this is one where I just want to point out before Mike tells you what's going on here. For those of you that think this is trading, if it gets to our extended target, The stocks moved 17%. That's an investment.
Yeah, no
That's
doubt
not a
about
trade.
it.
That's an investment. If we get to our extended target, we may not.
By the
We
way,
may get
Mike,
stuck out.
before you start talking about it, address this for me when you do. It looks to me like a bull pennant has formed, since that massive breakout, and any trade above that, the wick on that red candle from about 3-4 candles ago, to me looks like green light to above. So you just address that as you want.
Yeah, this is a minor little, a very minor. Here's what you're looking at right here.
Yeah.
So if it does break above here, then at least it's where it's in triple top territory right now. Again, this is another one similar to Amazon. Has been lagging, and it has gotten a double top with this spiked up, the thing that you said with top to make the pennant.
Yep.
Put it in potential double top territory. Again, because you have a potential double top, it might never trigger. But in the short term, guess what I'd be watching? Because if this has been lagging the markets, I mean, today the NASDAQ up 76 basis points, S&P up 58 basis points, and this is barely budged. It's actually down from yesterday's close. I would not take action because, again, there's no triggered pattern yet. But on a trailing basis, if this double top was triggered, would I want to be in it in the short term? No, because, again, you have the probability shift for a future pullback. We still have a massive gap left behind back on Friday the 9th, where you gapped up into Monday the 12th. So we could easily start hitting these targets in the double if it does trigger, which would need a close below 131, would be out of the way of the rotation zone and the 50. The only thing right in the way is the 200, but we also have the gap magnet, and Shopify tends to swing around a lot. So, I mean, I best people could figure out where my stop would be. If that's not triggered, though, we still have the probabilities of higher price action. Nothing's been invalidated yet.
Oh, so your stop would be below the middle of that double top, right? Settle below that.
It would be on a closing basis below 131 on a closing basis.
Okay. Below 131.
$100.31.
The prices I'm looking at say like 90s and hundreds over there.
Right here. 100.
Oh,
the low right there is
He doesn't mean
131.
131. He means $100.31.
I'm sorry. I thought you said 131. My apologies. I'm sorry. Yeah.
I might have misspoken.
Yeah. Let's all blame you. That's I'm more comfortable with blaming you. Thank you.
So paychecks, May 27th, I believe. We bought paychecks at $158 even. Okay. Stop is a close below 135.95, if I'm not mistaken on that one. Yeah. Close below 135.95. And the first target is 161. So what's this look like to you right now?
Still, I mean, let's just go to weekly. We've broken above. You see a major resistance. It's actually a major resistance zone. I'm going to put it why it's a zone is right there. We're still trying to trade against the highs from March, but it's building a base with a rising rotation zone. So it's still, nothing's been invalidated from the bullish case. Mm-hmm. And this is one I'm definitely going to be looking to raise a stop.
Nice. Yeah, I didn't get in this one. No, wait, paychecks?
Yeah.
Yeah, I did get in this one. I have this one. I personally own this one. So this is one that I was able to get into. Timing was right. The next one is Uber Technologies. We got stopped out on this one. This one was a loss. We entered it long, 87.99. Unfortunately, I don't know the date because one of the things that I do, I don't know if you guys do this, the second I enter a trade and it's wrong and I get stopped out, I think we got stopped out the same day. It might have been that very same. Actually, I think it might have been the next day. It doesn't really matter. The second I get stopped out of a trade like that, it's gone for me. I don't look at it. I might look to see if there's another trade developing, but I don't look to see if it turns around or any of that. You can see clearly on this one that we got stopped out and it continued lower. And that's what I really like about this particular, the way that we look at things. The Uber Technology trade was entered at 87.99, stopped out at the close on May 9th at about 84.30. So it was pretty quick. It was boom, boom, in, stopped out, loss. Again, you could see it extended lower from there. So I was pretty happy about the way that whole thing played out, and that we got out when we did.
And this is one that I'll probably keep on my radar screen over the next few days too, because let me go to longer term chart. We've returned to a very key prior breakout level with the weekly rotation zone. I need it now to prove itself with a little strength, but you know, there could be, for me, a potential rotation up or a percent B buy entry for a bounce. That does not mean it would go to new highs, but this is what I call a secondary reaction. Nothing is set up or triggered yet.
Nice.
Palantir is another one that I did get in. I was able to get in that one. Timing worked out. Bought that last week, 126. First target price was reached, 130.18. And again, my personal account, I did not exit this trade. Okay, I tightened my own personal stop up. We'll give you guys recommendations on that in the next newsletter. But the stop was not moved higher yet. Right now it sits at, if the market closes below 118.45, we're sitting at about 133.17 right now. So long at 126, first target reached. We're right now sitting at about 133.17. The second target, if you remember, Mike, which is the extended target, that means we only have 2 targets on the trade. The last target that we measure out in our newsletter is called the extended target, 139.95. What do you see, buddy?
Nothing's changed with this. Again, if we look at the weekly, we're still holding above very key prior breakout resistance. We are starting to stair step down with divergences, so this is starting to run out of some momentum. But again, the key breakdown point at this is actually in. So let me just put something on the chart here. This is
sometimes Jimmy. I don't know if Mike freezes or if he's just doing that Mike thing.
No, that's Mike. That's me. That's not my feed freezing. That's Mike freezing.
He's literally like an android. He's like, man, I was looking at.
It's funny.
Well, you know, my brain, my voice has to. My brain goes too fast, so my voice has to pause.
Sure.
And reassess.
It's like spinning.
Yeah,
it's suffering.
Right now, we are in potential double top territory. And again, if that were to trigger, I would not be in it in the short term because we could see a pullback in Palantir. But you see, nothing's out of the ordinary. We still have 137 as a minor target, and we had a cluster right around 140. So I believe our final target is right in front of that cluster. Should it continue higher?
Jimmy, you want to pause and talk about anything fundamental while we go into some of the recommendations we had in the newsletter for this,
absolutely.
this particular week? What do you got?
When you read the newsletter, my fundamental thesis, I fully believe that the AI story is more entrenched already than anyone's even really talking about. And the reason that's being kept as a minor little secret is because lawyers, accountants, writers are all using AI. They're leaning on it pretty significantly, but no lawyer wants to say, yeah, all my briefs are being written by AI right now. So I think AI is already like this insurmountable force. And I think 5 years from now, our world will look nothing like it does now. That's why I've been trying to get into some of the AI names. As you guys know, I have Google because of Waymo. I have, and because they're the CIA. I have Tesla because of full self-driving. I have AMD now because NVIDIA, well, I have NVIDIA as well, but not a huge position, but I have AMD hopefully on a catch-up trade. So I would like to look at those too. But I think I am looking very, very specifically for names to hold for the next 5 to 10 years that are AI related. Does that make sense, Bob?
It does. I want to read my favorite part of Jim's 3 cents. That's what we call the opening to the newsletter. Jimmy writes anywhere from 2 paragraphs to 100 paragraphs on what he's thinking, right? And he asked me recently, he goes, is it okay? It's getting long. I'm like, write 20 pages. I don't care. People might not read it, but write it. So this part made me laugh when I was reading it. In early April, we noted that the hatred of Donald Trump overwhelmingly drove a wave of selling. This wasn't just a guess on our part. I personally surveyed hundreds of money managers. He did do this, by the way. And the story was the same. He's going to destroy us all, so sell, sell. I don't blame the people themselves. That's a small lie. I blame the irresponsible legacy media outlets that constantly push the anti-Trump narrative. Kramer, Sorkin, and Quintanilla all get giddy when there's a negative Trump-related headline. I worked with those guys for over 20 years, and 2 of them were reasonably sane. Sorkin never was. They are not anymore.
It's so funny. I didn't put the name in there, but I knew all you guys reading it would be like,
I
yeah,
just read
Sorkin
it.
was never sane.
But the funniest part about this is the next paragraph starts, now let's bash the Republicans. Jimmy, you're going to lose your MAGA card.
Oh, I'm gonna be the first guy, by the way, who's kicked off of that one station on the left because I didn't hate Donald Trump enough, and then I'm going to be kicked off that one station on the right because I don't love Donald Trump enough, and that is going to be the pinnacle of my journalism career. Yes,
I will tell you guys, and some people might get mad at me. If you love your politician, get out, meet a person, have a family. I don't know what to tell you. Mike, do you have more to say about Palantir? Or you want to go on Pepsi?
What's interesting, Palantir, even if this double might not trigger, again, you could get a pullback to the weekly rotations, and again, which still wouldn't trigger a double. That's where I really like, again, a trailing stop at very key levels, because you can get pullbacks that don't take it out of the long-term trend. But if we did get that double, I could watch for the bigger, I would not mind exiting the rest of the position and then watch for a bigger pullback to potentially reestablish it.
And that's for you guys in the longer term basket that Jimmy was talking about. Mike's going to exit and get back in. You can just hold it. I mean, if you really like the company, we're giving you guys really good entries. You don't have to take our exits. You could just know that at these particular levels, these levels matter. The target levels matter. On PepsiCo, symbols PEP. Now we're giving you some of the medium-term trade ideas that we had that were released in the last newsletter. And I know this seems like a pitch for the newsletter, but you guys should look at it as you're getting the newsletter free this week because it's only Tuesday.
Yeah. And we're live right now.
I know.
Yeah,
so we were looking at a bounce play long. I need to read this because the bounce play long, there was a caveat to it. Okay. Buy on a close above 132.75. But the caveat was the stop loss is the close below 130.25. If this close happens before the entry trigger occurs, the trade is voided. So in other words, if Pepsi closes below $130.25 before it closes above $132.75, no trade. Mike, what's been happening?
Well, we pulled back yesterday, but what was the close? 130.91. And what's the level that it had to close below?
It was 130.25.
So we did not close below 130.25. And we still have a valid double bottom pattern. It's confirmed double bottom, but not triggered. It confirmed actually last Friday. And the rotation zone, by the way, why the entry was slightly higher was because the rotation zone was in the way at that point in case we triggered it on Monday. Right now, I'd actually be a little more personally be more aggressive with the entry, but 130.75, and we've triggered a double bottom. And if you look to see where the targets line up, and this does not make higher probability of men, again, it could move up and rotate back down. But the key targets are 134.45, 135.55, and the major target coming at 136.65 is right where the 50 EMA. It just happens to line up that way. So also with PEP, it's trying to carve out, and this is not a long-term hold for me. This is a bounce play only.
I was just
Why is this a bounce play only? Let me go over the probabilities. Again, this is one. So that I'd say, hey, if you want to try to long-term hold this, you might have to sit through some more rotations back down. This would be a bounce into the weekly rotation zone for a potential sell setup again. This is not one, hey, I think Pepsi's going to skyrocket. It has not formed a massive long-term base yet, and we could continue to see rollovers in things like Pepsi. I'm just playing a short-term pattern. Again, it is not triggered. It may not trigger. We could rotate back down tomorrow and invalidate the pattern. But in the short term, we could get a bounce play.
I could just hear people going, they just actually they trim their guidance. They said they're going to have they're not reporting prediction of profit anymore. It's a terrible stock. It might be, but even terrible stocks bounce before they head back lower. And that's what this was meant to be. So if you decide to subscribe and you are a long-term person, bounce, play long ain't for you.
So call on me for fundamentals. Please call on me.
Shoot.
That is the Robert F. Kennedy trade, people. That is hopefully we are moving in the direction of a more health conscious society, because so far we get an F- on that grade over the last 30 years. This hopefully, and by the way, I don't want him singling out Coke and Pepsi and putting big taxes on using high fructose corn syrup. I think that should be everybody's choices, but I do think awareness is key. I think this market is saying there's fear of that. That's why this stock has underperformed so drastically this year. And I think that's a huge part of it. And that's why I would not own this stock. Like I own Altria. I own cigarette companies. They pay a dividend. And I figure if you guys want to smoke your asses off, I might as well get it on the back end. And it pays me about 6% or something like that too. But I wouldn't buy that with your money for an investment.
Speaking of Altria, we gave a long term.
We did. We gave a long-term hold on Altria. Again, to those people who think this is just trading, we put this one on. We said, this is a long-term hold. If you don't plan on holding this, just ignore this section. It was basically how we worded it.
Don't they pay you like 6% or something? I know I have the stock.
Yeah.
I have a good amount of it.
6.73%.
What did you say? I missed it.
6.73 currently. And that's why on these pullbacks, I love this stock on pullbacks, because again, this is not something I'd trade. This is a stock, not a swing trade stock. This is something, hey, I watch for those key pullbacks. Even dips, look, we dipped below the rotation zone, closed back in it. We dipped back in May into the weekly rotation zone and rotated back up. I love watching this thing because the yield even goes up higher. The price pulls back, the dividend yield goes up higher. And this, if I can sit and collects, 6-7% annually, I don't mind pullbacks in it.
Okay, Bobby, I got a question for you. And this is this is about psychology more than anything. Okay, I've made a crap ton of money betting on addiction. And it's not just cigarettes. I own a bar too, which a bar that brings a lot of joy and communal social setting for a ton of people, but it does make money on addiction as well. Anyone who owns a bar, a neighborhood bar knows that. I do. There are moments I feel guilt, and then there are moments I don't. What are your thoughts on that?
I was the subject of a documentary called Planet Finance that you can now find out there. It's just really funny when people ask me about it. I'm huge in Denmark. I'm huge in the Netherlands, because that's where the documentary crew was from.
If you're not huge in Luxembourg, then don't even talk to me. But anyway, go on.
I love Luxembourg. I've been there a couple of times. It's a great place. No, they came and they followed me around for a couple of days, and they asked me what my biggest trading day ever was, and it was 9/11.
Yeah, I made shit tons on 9/11 too. Yeah.
Yeah, and I before I answered the question, I just instinctively said, I hate this question. It was 9/11, but this is our job.
Yeah.
Like, this is our job. If you're sitting there going, I want people to die so I could make money on this, you're an asshole.
No.
But that's not what we do. I
scrambled to make sure all my customers were square and we're good and we're not going to get blown out of their career by these assholes. And then 2 weeks later, when the dust had finally settled, I was like, wow, shit, I made a lot of money on that. Yeah.
Right. And, it's funny because the whole idea that we would, these people, unfortunately, bad things happen to people all the time. And in my view, our jobs are to not let it happen to our clients, while that same event was going to happen with or without them being our clients.
Yeah, no doubt about
it. It's tough. There's one of the things I hated talking about in TV interviews.
Right.
Because then you got to do obviously our thoughts and prayers, and it's a tragedy.
Do we even have to say that anymore? I think people know us well enough. So I don't want anyone to die of lung cancer. I don't want anyone to die in a plane crash. I'll literally intervene on their behalf. But that doesn't mean I won't own the stock and collect the 6.7%. But anyway.
Yeah, agreed.
Yeah.
The next one that we put out, I'm glad you brought up that Altria, Mike. That was a good call. Marvell Technology. While you pull up the chart, I'll give you the specs that we laid out on this particular trade. We wanted to buy this. Is that right?
No.
That is not right. We wanted to put on a put spread.
Yes.
The put spread was on a close below 59.32, which I don't believe has happened.
Nope.
And since then, we blasted to the upside, did we not?
Yeah, but
At
it's
least
not
once.
validated yet.
Yeah, it has not been invalidated.
No.
Okay, so on this particular one, we talked about buying a 59.52 put spread. Now, down the road, when Jimmy has expanded his licensing, we'll probably go deeper into what options we're talking about. But if you're a subscriber and you see this particular show, we're leaving the duration up to you guys at this point. And there's a lot of reasons for that. And the reasons are this is a weekly newsletter and things can change and Greeks can change and volatility can change. And we just don't have the bandwidth right now to come out and say that, hey, you want to roll into here, you want to roll out of the 52s and into the 50s. We just don't have the bandwidth to do that. So down the road, we'll do a more complete options trade, but we're not doing that right now. But it was, if we get a close below 59.32, we want to buy a 59.52 put spread.
Awesome.
Yep, and that's not triggered yet. If we continue to rally, it will be invalidated without triggering. Also, one of the things I like that we put out some possible shorts and longs. We're still more tilted towards longs because the market's still moving up. But remember, I said we're getting the cycle tops. If we roll over in the market the next couple of days, this could trigger the downside. And hey, if this triggers, then it could also be, something that helps offset some pullbacks and other things.
There's something else funny here. Not funny, but when you look at this particular trade, we have a thesis in there as to why this might be a good trade. And it's purely technical. It has very little to do with Marvell's fundamentals or any of that. We did put that they postponed their investor day and, macroeconomic uncertainties, the traditional kind of hand job.
One thing also,
is hand job a technical financial term?
Yeah, it is. It is in the Smith's Guide of Financial Terms by Italian.
Which, by the way, when you just put that long-term chart up, that looks like shit to me.
What is it? Look, we've had a sell-off. We've had a bounce back into the weekly rotation zone.
Tired box.
Yeah. 200 week over top, and we've had two spikes through it that formed the potential or confirmed double top.
Yeah.
So if we roll over again,
forget about it.
We could easily retest this low area from mid-April. Would not surprise me.
Yeah,
but the trade hasn't triggered yet.
Right. Forget about it's in the finance handbook too, I think.
It is. We got another short, and I wanted to point something out, Mike. If you could put up that double again, just real quick before I put up this other short. That is what's known as a confirmed but not triggered double top. In Caterpillar, which is the next one on our newsletter.
Hold it, Bobby, before you go, the confirmed is the wick and the non-settlement is the fact that it didn't trigger, correct?
Correct. We need a settlement below the base of that double top, which is where Mike's cursor is right now, in order to get a trigger of the trade. The confirmation is that a wick went through that level to prove the sort of whole pattern out. This is based on Mike testing about, what was it, like 20 years of data, Mike? Something like that.
At this point, I've tested over 12,000 double patterns.
Okay. By the way, the first place Chicago Cubs take on the national site.
Cubs are good. They do not like to lose.
Yeah. They're so fun to watch.
Yeah.
Caterpillar, Mikey. Now, here's the reason I'm bringing up that confirmed. We had somebody ask this because you can ask questions in the newsletter. Caterpillar is another potential put spread, and the close below 336.24 would have been both the trigger and the confirmation. We do not have a confirmation because it is not even broken 336.24. This is a potential double top. And on this one, if it does close below 336.24, we want to buy a 335.320 put spread.
No, we don't.
Why not?
Anymore? It's invalidated?
It's invalidated. It just
look at this. Hey,
it's
somebody's got to post that on the app, guys.
It just got validated today.
Okay.
All right. Somebody's got to put up on there that the put spread in Caterpillar is invalidated. And that means the double top is invalidated. That is no longer a double top. This is something you guys should learn that, again, Mike's testing has proven out. A double top is a pattern. It's not just the presence of two tops. There's an actual pattern with structure and probability.
Is it invalidated because that most recent green candle got within a certain percentage of those tops again?
Yes.
Good.
And you see, this is why I also, one of the things, if there's a lot of people who learn doubles from me on my daily live stream, but when the rotation zone, see how the rotation zone has held the bottom blue line, see we've pulled back and we've rotated back up. Now, what was interesting about this is if it was not invalidated, that rotation zone would have been out of the way. But the rotation zone ended up holding. That's why people say, well, why do I have to wait for it to trigger? Why don't I just, when I have a double top, put it on? Because it might be invalidated before it ever triggers. And this one, invalidated before it ever triggers.
Just starting that post to make sure people know that.
See, the rotation zone held. That's why, by the way, the people who don't know the rotation zone concept, it's the 8 EMA is the top one. You can see 8 EMA on a closing basis. Why does that say SMA? Don't know why that said that, but it's the 8 EMA and the 21. And then it's the 50 EMA and the 200 SMA. The 200 simple, all the other ones are exponential. So
all right, so
done.
The last one we put under a heading that called higher risk trades. Now, we won't always have these. Okay, last week we didn't have any. But this week we had a company called Skyway. And the symbol is SKYW. I'm sorry, SkyWest. My bad. SKYW is the symbol. And this was another pullback long. I don't know if we got it or not, Mike. I haven't looked at it since I corrected it.
What was the pullback level?
98.48. If we got it, I don't have this one.
No, it did not pull back enough. That's why we didn't get alerts.
All right, so this is still a viable trade. It's a pullback buy at 98.48. Target prices are 102.35. Extended target is 105. So again, for longer term people, that means if it gets through that first target and you feel like you like the company on the way to the extended target, just trail a stop and hang on to it. Mike's about to point out a double top. Go ahead, Mike.
It's now hit double top territory.
Potential double top.
Potential. So, and look at here. Let me pull off these harmonics. This is why every day things can change for the short-term trader. That's why we'll have stuff like Altria long-term. You can do some other things long-term, but this would be a short-term trade only. And look where it is. All right, it's entered potential double top territory, but look at all these moving averages, especially the 200 and the 50. And the prior, see this prior resistance area? So here, we had key support going back in March, retested at the end of March, and it held. So this prior support, which it broke below, became confirmed resistance. It then gapped above it, ran up, retested it here, confirming the support, moving back up. I would not want to own this with a double top if it broke back below the 50, the 200, and the prior support level, which has already been retested, which formed a double, which formed the base of the double. If it closes below that, would not want to touch this thing in the short term. We could easily pull back more.
Yeah. Makes sense.
All right, so that is it in the newsletter. For those of you that are interested, the link of it is in my Twitter bio. If you're watching on Twitter, it's also Jimmy's his
pinned tweet,
pinned post. It's X, not Twitter.
X. Oh, sorry. Yeah,
I did say Twitter profile though.
Oh, you did. Yes.
Yeah,
right.
I did screw that up. I'm sorry. I'm kind of like my mind's elsewhere because I'm posting to our subscribers that they should not put on the cat trade if it were to reverse lower.
Got it.
Mike, do you want to pull the Skyway one as well, or SkyWest one as well?
I'd pull it.
All right, so we're going to pull that one too, in case you're a subscriber. Don't do that one.
Don't do that one. However, for people watching this, they get a little bonus. If this were to pull back closer to this base, there's a gap left behind also. That's why if I was going to get in this, I'd get it closer to space with a very tight stop.
Mm-hmm.
Because why? We could easily fill this gap, hold the 200. I could put a stop right below, what's that level? 96.23. If it broke below 96.23 and closed below it, I took very little risk and I'm out. If that level though holds, we could then see we could be sideways channeling, because we also have the first cross the rotation zone on the weekly. So that would be, I'd refine the entry. We may go through this. Let's just cancel it for now, but I may go through this and refine the entry for our next newsletter.
Okay, well, I'll leave it then because we're pretty far away from the entry, and you could refine it.
I wouldn't buy it on a dip into the rotation zone at this point. So
what else you got, Jimmy? We've got about 2 or 3 minutes left.
Just give me AMD, will you, real quick?
AMD.
We have time for Google as well if you want.
No, Tesla was the other one I got.
What's Google's symbol? CIA?
CIA, right? Nice one, Bob.
Did you guys know that the government has a movie budget? The Pentagon specifically has a movie budget.
Really? What do they do with it?
They mimic Goebbels. It's propaganda is basically what it is, right?
Do you know our government is propaganda?
No, that is outrageous. By the way, I'm having you put in the gulag for even suggesting that.
Yeah, I'm on my way. You'd be doing me a favor. Also, after that, I do want to look at Tesla for a specific reason, but go ahead.
Good, I have that. So let's just go quick on both these.
Here's the thing with AMD. We've got a couple rotation zone buys. Again, watch the bottom of the rotation zone. Pulled back again Friday, May 23rd, pulled back Friday the 30th. It seems to be a thing with Fridays with AMD. Rotating back up. Still, we have the rotation zone in its favor. Major support is 107.74. If it trades above, this is what's key. If I was long anything and it trades above 118.81 and then trades back and closes back below 107.74, I would not want to own it in the short term. Other than that, trend is still up, and my major target would be around this 126 area, which is the 200 area and a minor harmonic, a reverse harmonic level.
And I'll add, when I started buying this, and you guys know that I want to get more into the AI trade, when we get to Mike's level, you know, I still have trade size on, not investment side. I'll probably take off 2/3 of the trade and then put the other in the investment corral and just hopefully keep it for 10 years.
Yeah, and if people are looking for the longer term investment, and I'll show you again. Oh, so beautiful. So these are the pullback harmonics. We have the 50% harmonic right in front of that 200 also. And look where that sits. So I might make my target a little below that, Jim, about 125.25.
Right.
But you see, look at this key resistance area that it failed from. You got that. And then the extended targets, though, if it can eventually settle above, if you, let's say we peel some off there, or you do, and then, hey, turn it into a longer term position, more of an investment grade, here's your targets right around 137. That's the next harmonic. And look at this key breakdown zone right there. You got a harmonic cluster. You start closing above 137.46. My continued targets are 149 area, then 161 area.
Perfect. Let's roll over to Tesla.
Here's my question on Tesla. And just so you guys know, there is a really good market trend person who replied to our X posts that supposedly following this person has been great for their strategy. You guys seeing all that spam that comes on every single thing?
Unbelievable. Yeah.
It is outrageous. I report every single one of them multiple times.
Yeah.
Because I think they have to be working on it. Of course, I also think what annoys me is the most important thing to Elon Musk.
Should be the most important thing to Elon Musk for sure.
I see a head and shoulders reversal here, possibly developing. The right shoulder's not developed.
I already had it on the chart, by the
way. What do you got?
Yeah, you close below 331. You're out of the way of the rotation zone. That would mean we rotated back down. So you see an incomplete shoulder. I'm going to trace what I'd be watching for.
Yeah.
But we close below that. I'd easily see we have key gap left behind.
All falls right into the target, sort of, right?
Yeah. So I'd be watching for then a extended pullback. And I'm actually bearish on Tesla.
I might be because I just have call spreads on, and they expire on Friday anyway. So
what number? +3, -3.
Yeah.
What was that?
+3, -3.
On Tesla, I'm at -1.
Wow.
Yeah, I got to get out of them anyway. So I mean, they're going
the only thing that would shift the probabilities for me, as I said, I've said this on my live stream. I'm watching for topping patterns, setting up between 351, which is a 50% harmonic, and the 385. The only thing that shifts me in short-term continued bullish is if we close above 385. That's it. Other than that, I'm watching for rollover patterns in Tesla. I'm way more, from a self-driving aspect, I'm way more, this is my fundamental thesis, but I don't trade a fundamental thesis. I'm way more bullish on like the Waymo kind of stuff than I am the Tesla vision only and fake robotaxi rollout in Austin. So there, I'll get banned from X again.
Never mind. We'll talk about this offline. It's time to go.
I'll get banned again from X. Doesn't matter at this point.
Okay, let's sign us out. First of all, we want to thank you people, particularly our subscribers to the newsletters. This has been such a great ride so far, and we're getting such great feedback. Appreciate it. The rest of you who watch this show, we love you guys too. Thanks to the DMs, all the feedback. We want to thank our favorite sponsor, Marco at Independence Arc Farms. We complain about big food conglomerates taking over our food supply. There's something we can do about it. We can eat grass-fed, grass-finished, farm to table, small, independent, regenerative farming, which, by the way, I didn't find out that they practice regenerative farming until recently. I've been eating their meat for a year and a half. Talk about burying the lead. Please try Independence Arc Farms. Thank you very much to all you guys. Remember, Bobby and I were in legacy media for 25 years, always an overzealous producer or sponsor telling us what we could and couldn't say. And as you guys might imagine, we got a little bit tired of that. This has been the Future's Edge. Thank you, guys.